Hello, it's Richard Bowser here from Property Investor News magazine, and today I'm in North London at the Auction House London auction, and we've just had a very busy question time event. This is an event that takes place prior to the auction, and on the panel with me today was Anna Clare Harper, who's a contributor to Property Investor News. So good afternoon, Anna.
Afternoon, Richard.
So we've just had a very busy event. First of all, tell our viewers what it is that you do.
Yep, so I'm a real estate investment strategist and co-founded a business called Anglo Residential, which is a UK property investment business focused on long-term value in the residential space. And we've recently raised £6 million of seed funding to build a £100 million portfolio across the north.
So you're looking in a process of acquiring residential assets?
Yeah, absolutely. Yeah.
And this is for long-term ownership in terms of the rental income?
Exactly. It's around preserving your wealth in assets that will remain stable and potentially grow, but you don't need it to grow to make some money because the rental income is proven tenant demand and strong. Excellent.
So you've expanded on the strategy in an article that you just contributed, and that's going into the May edition of Property Investor News, which will be out very shortly. So just give me maybe the three key points that you elaborate on in the extensive article that's published in Property Investor News.
Sure. I mean, my first point is that the idea of wealth preservation is not boring. I have had some feedback that is, why are you doing that? It's not very sexy as a strategy. Well, actually, it's not very boring in an uncertain market either. The second thing that I wanted to point out was that in many senses, slow and steady wins the race, especially in an uncertain market, beset by regulatory trends, political uncertainties, and macro factors, as well as micro. And the third point was that targeting wealth preservation and growth can help investors to avoid a lot of very common mistakes which come out of, let's say, emotional decision making or being a little bit too greedy or basing your assumptions about tomorrow on what's happened yesterday. So it's about minimizing risk and not necessarily always maximizing profit, but on knowing that you are going to get a profit. So putting money in and knowing that you're going to get more money out. And that's the strategy.
As opposed to putting money in, not getting a return, and then losing.
Yeah, and potentially putting a whole lot of effort in and taking a whole lot of risk on, which I think a lot of the time, if you've not had experience of the downside of investment or development, people forget about the risk and they forget about the effort. There is no such thing as a free lunch. I tend to look at three metrics in my decision making and strategic decision making. It's risk reward, effort to reward, and opportunity cost. And the changes in the market have changed all three of those. So you have to change your strategy, and the way I'm changing in response to that and in response to the risk preference and effort preference I've got is focusing on wealth preservation and income.
Thank you, Anna. So obviously people can read that article at great length.
Yeah.
Yes. It's not War and Peace, but in the May issue of Property Investor News. So how do people contact you, Anna?
Yeah. So the best place for me is LinkedIn, Anna Clare Harper with no I in Claire. I've also got a website, annaclareharper.com. We can get in touch and find out about the boardroom sessions that we're doing, about the other free resources I give out, and I've got the Return Property and Investment podcast too. And Instagram, where it's a bit more personal flavour, if you like that kind of thing.
Great. Okay, thank you for your time.
Thank you.
Again, thank you.